Alrighty, Matt.
Rachel.
How are you?
I'm good. How are you?
I'm good, thank you. We are technically on episode 5 of our podcast, but this is actually the first time we're filming, so it's very exciting. New channel, new medium.
It is. And I'm getting used to staring into a bright light, which is going to take a while to get used to. I'm not going to lie to you, Rach.
It is, but we're all about lighting because it makes the video look so much better. Alrighty, so today we're talking all about first home buyers and actually going to run through 10 tips for first home buyers to know. That we are. We've both been first home buyers in the not too distant past, probably in the last 3 years.
Yeah.
And what we normally do with this podcast is an Unbroke moment of the week, where it's normally focused around amazing savings that we find during the week, budgeting tips and all the rest. But seeing as we're talking about first home buyers today, we've both got a pretty funny story relating to pests that we had.
Oh no, here we go.
In both of our first homes. So I think, Matt, you should kick us off with your pest story.
Oh no, Rachel. And if my husband's listening, block your ears for this one. Okay, so we bought our first home, and what happens sometimes when you buy a first home, or any home I suppose, is a real estate agent gives a gift. Sometimes it's token, sometimes it's not. And I suppose the quality of the gift reflects like the initial purchase price. So as you go up the market, in theory, you get a better gift.
So if you're buying a property for like 500,000, you might get like...
Yeah, I'll give you an example.
Some nuts.
Yeah, so that's kind of where we're at in the first one. So we got a gift basket. And to be honest, I don't remember the details. But what I do remember is there was a packet of nuts.
So you're not quite at the Verve Clicquot,
no, not
$4
quite
million.
There was a tokenistic bottle of wine. It was probably a red number from like Aldi or something. Anyway, so we open up the gift package. Oh my God, awesome, so good. Like we're just moving into the property or a couple of days into setting things up. And the place that we had a fair few cupboards. And you know in kitchens how you have normal cupboards and pantry and whatever, and then you might have like a short cupboard.
Yeah.
That's... you don't really know what it's for. So it may be chopping boards.
So you just stuck the nuts in the chopping board cupboard.
So yeah, pretty much what happened is we got everything, and they were kind of like the gross pecans and
Were they ones that had like sugar on the outside?
No. It was a basic packet of nuts that didn't have any dressing or anything.
Boring.
That made it kind of nice. So what we did was what I did was put the nuts into that cupboard that we didn't think to use because I didn't have any purpose.
Okay.
And so fast forward about 3 months, it came to Christmas time, and we went away for Christmas and came back to the house. And when we got back to the house, we noticed all these little black things flying everywhere in the house. Like, what is that?
And like, flying, so they're not ants.
Yeah, not ants. Where are they coming from? Unsure. Anyway, so whatever. Get the vacuum them up, kind of find it, didn't think anything of it, and then they kept coming, and then we one day worked out that
like where were they coming from?
The source of these what turned out to be house weevils was this packet of nuts that the real estate agent had given us, and we'd got to eat basically.
Gross.
So for about 2 months we spent in this new property, we spent time with our little vacuum going up every day and vacuuming up off the roof, literally, the weevils. So buyer beware. If you get a packet of nuts, make sure you either eat it or maybe don't if there's weevils in it and throw them out. So that is my Unbroke / first home horror story.
And now you're on your yearly pest.
Yeah, now we're on a regular. And Rachel, you do have background in pest control, so I should have really spoken to you.
I do. I come from a long line of pest. No, not really. My first job was at a pest control company.
Yeah.
It was my uncle's pest control company, and I learnt a lot about rats and cockroaches and.
What about house weevils? Did you learn?
I didn't. No, I feel like that's a rare one. Oh.
All right. Well, buyer beware, as I say. Now, Rachel, what about you? Tell me about your pest-related story.
Mine involves the age-old Aussie cockroach, or
Aussie
cockroaches and German cockroaches. We had them all. We had all of them. So when we bought our first property, we had a 3-month settlement. So 3 months between when we bought it and when we moved in. And no one was living in the property during that time.
Mm.
And so we get into the property, we notice a few cockroaches around, but it's a 1930s build. We're on the ground floor. There's a garden outside. And
stacks up.
It's in the city, in Sydney, these things happen, like cockroaches everywhere, just generally. So I'm not too worried, and I'm a pest controller, so I'm like, I was in customer service. I was not a pest controller, but I see a few cockroaches around. But then we've moved in, and as time goes on, we're starting to get a few more cockroaches, and there are babies as well. And I'm like, ooh, they're breeding. It's not ideal.
No.
But I'm quite laissez-faire. Like, I'm just like, oh, it'll be fine. It'll be fine. So we booked in.
Did you just treat the symptoms rather than the root cause as you were
No.
Or?
So I booked in pest control,
Okay.
but it was summer and it's a really busy time for pest control. So I booked it in for like 3 weeks' time. Because they were like, oh, the next time we've got available in your area is X. And I was like, yeah, sweet. So over the 3 weeks, they just kept getting worse and worse. And it kind of like, what do you call it when it just escalates rapidly? Exponential growth of cockroaches.
That's how populations grow.
It was full on.
Oh no, what happened?
So what happened was Mateo, my lovely, lovely boyfriend, was blow drying his hair, which is a rare occurrence for him. He doesn't blow dry often, but it was a special event, blow drying his hair. I wasn't at home, thank God. And he started to smell something weird, and he's like, something smells like it's burning.
Oh no.
Is it my hair? But then it was way grosser than that, the smell. And then all of a sudden, this cockroach flies out and hits his face.
No, Rachel, it's his face. So what? He was looking into the eye of the, like where the air comes out, and then all of a sudden, that is honestly terrifying.
Oh, and then it turns out they were breeding in there because they like warm, dry places.
That's so gross. I know that this is traumatic for you, but I think this story gets worse from my recollection of it.
It does.
Tell me more, Rachel.
Well, then I was like, okay, the pest control needs to come immediately tomorrow morning.
It's become urgent.
It is urgent. We are not sleeping in this house until the pest controller comes. So then he comes, and then I'm at work and I get a call. The pest controller's in the house, and he's like, oh, just looking at your kettle. I'm like, okay.
Yeah, it's great.
Cool, yeah, it's actually quite a nice one, thank you. And then he goes, oh, there's cockroaches that have started breeding in the motor. I'm like, excuse me? How can they even fit in there?
No, Rachel,
again, warm, dry places.
Yeah.
So anyway, we got rid of them though. He did well.
And have you had any problems since?
No problems since. We get the odd one, but we're all about that.
Stay on top of your pest control.
Stay on top of your pest control.
Yeah.
And get a pest inspection before you buy a property.
Did you do that?
I forget.
Yeah, so no.
Probably not.
But what would it have changed? I mean, all you would have done would have probably got it sorted before we moved in.
Yeah, but the most important things you want to be checking for, and I don't forget whether this was in our tips, but you really want to check for termites. That's a major one in properties.
Yeah.
Especially in Australia, there's a lot of areas that are very bushy, and often they'll have termites around, so you just want to make sure that there's no termite damage before you go into buying a property. Anyway, I hope everyone enjoyed that. Bit gross.
Disgusting.
But important to know.
Yeah.
But let's get into our actual tips for today. So tip number 1, Matt, what should first home buyers think about before buying?
Well, this is our tips, and you could probably come from this for a number of angles, but for us, it's logical that you start with a budget. So we'd recommend creating a budget. You could do that in a number of ways. For example, you could jump onto our website, unbroke.com.au, and you could download our budget calculator, and you could see for yourself how to categorize your expenses and your income and get a good understanding of what's going in, what's going out, and how's that looking for you. Because really, financial power or borrowing power is going to really determine what's available for you in terms of the property market.
Yeah, and I guess there is like 2 main things you need to consider when you're buying property. The first is having whatever you need for the upfront deposit or upfront cash, including stamp duty and all other costs. And then the other one is how you're actually going to service that loan ongoing, which is all about kind of what's coming in income-wise to be able to pay back that loan. So you want to have a look at both. How much am I saving? How much do I have saved? And how much might I need to save to afford the property that I want? Definitely. And also, how am I going to factor in the new loan costs as I go along?
Yeah.
And I guess when it comes to making a budget, it's really understanding what expenses do I have today that are kind of fixed, that I can't really change, and where do I have a bit of room where I might be spending a little bit too much on going out or on clothes, and I can actually start to reduce those expenses if I'm wanting to save more or get ready to buy a property. Definitely.
And another thing is that we've observed as mortgage brokers is it's great to have a really high income. That's awesome. It's really good for you and your partner or whatever. But really, it comes down to that net impact of income less expenses equals what the bank will then service the loan on. So sometimes just mindless and not aware of exactly where your money's going. So going through the exercise is really, in our view, a necessary component of, firstly, you're going to be undertaking a big decision financially. And so you want to be prepared going in eyes wide open, and in this case, budget wide open, so you can be aware of exactly where everything's going as a starting point. Get a baseline.
And look, I think some people kind of think about creating a budget and they're like, oh, that means I'm not going to have any fun.
Mm-hmm.
It's like the idea of having a budget and restricting yourself.
Yeah.
But what I've always said, and I consider myself to be quite a good saver, is I'm not just not having any fun, but what I am doing is understanding where I'm spending money on things I don't actually value, if that makes sense. So for me, things that I, really love, like keeping fit or going out to dinner with people, they're things that I really value. So I'm okay with spending money on that. But getting takeout for lunch every day at work is not actually something that I value when I'm not spending time with people. So that for me is an area where I try and make my lunch and bring it from home most of the time, because that saves money and it's not really something that impacts my lifestyle. So just an example there of how you can start to think about your own life and your own values, because it's going to be different for everyone.
Yeah, for sure.
Yeah.
So creating a budget, you might have some success. You might find that you, for example, used our tool or came up with something yourself to kind of get there. What would you say is tip number 2? What's the next step, Rach?
Yeah, I mean, this is a little bit of a plug for us, but speaking to a mortgage broker can be a great way to understand where you're actually at in terms of being able to afford a property. So what a mortgage broker does is essentially they'll collect your information, so your income, expenses, your employment, and they'll actually give you an idea of where you're sitting at the moment. What could you afford to borrow? And, if you're not able to afford the property that you're looking for yet, what it might take for you to get there. It can be a really great way just to understand where you're at financially and put in place some goals of when you want to buy a property and what type of property you want to buy too.
Nice.
Yeah.
I mean, we've found with some clients that we've been going through, Rach, that it might be come to us and go through the assessment exercise and then work out that's a 2-year goal for you. Okay, go away and come back to us again, or, think about it. And sometimes people are ready to go straight away. So awareness is a really important part of the journey.
Yeah, and I guess when we're talking about mortgage brokers as well, it's good just to mention why someone might use a mortgage broker as opposed to going directly to the bank. Because you can go and apply for a home loan directly at the bank, but there are a few key, differences between doing that and using a mortgage broker.
Yeah.
What would some of those be?
Well, I think for number 1, it's about giving you a range of options. So not every bank, so you might just say, okay, I currently bank with, let's say, Commonwealth Bank, for example. Okay, I'm just going to apply for a home loan with them. That's great. And you can certainly do that. But if you come to a broker, we actually work with a range of lenders across the country and options and choices, because not actually every lender's the same. Every credit policy is different. There are certain niches that work for some and not for others, which really means we look at your individual circumstances and try and find the best products and options for you individually.
Exactly. And that might be things like you said. So it's not just that headline interest rate that's different, which when you're looking at a website of a bank, it's easy enough to look at the headline interest rate and compare those across banks. Sure. But what you might not know is that bank willing to lend you more than another bank? You don't know that unless you've gone through the process of that assessment. And
then what are even your goals in the first place? So so again, coming to a mortgage broker will help you establish sort of the root principles to start with before you go on your journey.
Yeah, totally. And also, there are some banks that may treat different types of income differently. So for some banks, they may not include bonus income, whereas other banks might include all of your bonus income. So there's all of these little niche policies that you do really want to know. And I guess the other good part about using a mortgage broker is that it's free. Yeah. Now, this is a really important one to just cover off, because a lot of people might think, oh, well, if it's free, where are you getting paid from, So just to clarify that for everyone, the way mortgage brokers get paid is we get paid a small percentage of the loan amount once you settle that loan. and that is paid by the bank or by the lender that you choose to go with.
Yeah.
And the reason why they're willing to pay us that is we've essentially done all of the upfront work for them in terms of qualifying you as a borrower, and we've done a lot of that admin work. So if you almost see us as an extension of the lender, and we bring them the loan, pretty much all wrapped up in a bow and ready to go.
That's it. It's an efficient way for the bank, in a nutshell, an efficient way for the bank to generate business.
Yeah.
And for the customer, it's a great way for you to explore different options,
Yeah.
because we're credit policy experts, we
Yeah.
know all the credit policies and the lenders, find the options most suitable for you. So it is genuinely, there's no such thing as a free lunch, but in this case, it is a win-win situation
Yep.
for both you and the lender.
Yep.
So it's a really great system. It's a great way to do it. Intermediated business is a really excellent way to look at a home loan.
Yeah. And you definitely, I guess, won't get a worse off interest rate if you go with a broker. That sometimes people think, will I get a worse off interest rate because of that? But no, actually the opposite in some cases. We do have some tools with certain lenders where we can go and request discounts to match another lender. So you could end up getting a discount, not guaranteed, but there are options.
Yeah, that's it. Look, and many more benefits. Having someone look after you post the loan settlement during the process, hold your hand along the way, and make sure that you feel comfortable. So that's what we're here to do. We bought properties, and we found that we would have benefited from mentorship and advice, and so we want to provide that to everyone.
Yeah. And something that we love doing with our clients is we always have a group WhatsApp chat.
Yeah.
And we just find that that's a really easy way where they can ask us any question at any time of the day. You're not doing emails back and forth. So it's just an example of having that really close relationship with someone that can actually guide you through the process and make you feel comfortable.
Now, enough plugging of mortgage
we're
brokers
done.
at our business. Back to the actual tips. So I think we said tip 1 was know your budget, but really tip 1 was beware of insects, maybe.
Yes.
when you go to settle. But yeah, so the next one, Rach, do you want to talk us through
so
tip number 3?
Tip number 3 is a pretty quick one, but it's just to know your limits. And I guess you'll be told your limits by the lender. They'll say you're allowed to borrow this much based on your income and expenses. But knowing your limits can really give you just that security around, okay, I know that based on what I'm earning today, this is how much I can afford to borrow, that's what my repayments will be, and it just gives you that security around, I feel comfortable with this.
Yeah.
And that just happens through talking to your broker, going through the process of understanding your financials, and then just having that solid amount of this is my limit, and then going into actually purchasing that property, you'll feel a lot more comfortable about what your maximum would be.
Definitely.
Yeah.
I think that is a great tip, knowing your limits, and also getting to understand how comfortable you are with different scenarios potentially.
Yeah.
So just because the bank will lend you, let's make up a number and say it's $2 million, does that mean that you're actually comfortable with that? Yeah, sure. You might be able to afford it on paper, but then are you going to feel stressed meeting those repayments and that sort of thing? So it's a conversation you have to have with yourself.
Yeah.
And remember that maybe what's in the bank's interest in terms of lending may not necessarily be in yours. So you really have to think about it in terms of your own goals, needs and objectives.
Yeah, absolutely.
Yeah. Cool.
Thanks, Maddie.
Yeah.
So the next one we have on the list is to know your eligibility for first home buyer schemes.
Mm-hmm. And there's a range of them, aren't there, Rachel?
Yeah. Do you want to take us through one of the main ones?
Happy to take you through. So first home buyers have a lot of support in Australia and in New South Wales, which is where we're doing this podcast and where we're based. So one of the key schemes we've got is at the moment the first home buyer choice scheme, which is currently in place in New South Wales, but may end soon. So just to give a little bit more detail on that, when you buy a property, you usually have to pay what's called stamp duty or transfer duty. It's a state-based tax on the property purchase price. So if you're a first home buyer, there's schemes that basically exempt you from paying the tax potentially if the property is within a certain price range. In New South Wales, currently up to $650,000. If it's your first property and it's a principal residence, I feel like I'm about to sneeze, but I'm going to try and push through, then you're exempt from stamp duty. From there up to $1.5 million, there's then a choice that you've got if you're a first home buyer. If you meet all the eligibility criteria, which you can Google quite easily, you can then basically opt to pay no stamp duty up front and instead pay an annual land tax.
Yeah.
And that has quite a big impact on borrowing capacity.
Yeah.
And also how long it would take for you to save your property, Rach. You've done the numbers, haven't you?
Yeah, I mean, so I guess with the way property prices are at the moment, it's really, really hard for young Australians we're talking about in this case, to afford that deposit amount. It can be hundreds of thousands of dollars if you're trying to save a 20% deposit plus stamp duty.
Yeah.
So that's where the government comes in and can help you with a range of different offers to discount stamp duty, to have land tax instead of stamp duty, or to reduce the percentage of the deposit that you need. So that's 5% or 10% in different cases as well. So lots of different schemes, and again, brokers can help you to understand the eligibility for each of those and how you can take advantage of them.
For sure. So we didn't really touch in detail on the first home guarantee scheme, but just to go in a little bit more. So we talked about stamp duty exemptions. Another scheme that the federal government this time has got in place is the first home guarantee scheme. That is where if you meet the income criteria and you're a first home buyer and you're buying in certain areas in Australia, there's price caps, but in essence, you can borrow from as little as a 5% deposit. So another option. So you might be thinking, typically I need to save 20% of the property purchase plus costs. Did I say price?
Property purchase price.
Price, speak slowly. Price plus cost. There are other ways to do it. So again, speaking of brokers is going to be a good way to do that, or a bit of research of your own on Google, and you can find more.
Yeah, and one thing just to mention, we might do a specific one on first home buyer schemes, but recently the property price cap for New South Wales in capital cities and major regional areas, the cap's actually risen from $800,000 to $900,000, which people living in Sydney, you all know there's not much you can get under $900,000 these days. So really great to see that the government's starting to recognise that young people need a bit more help there.
Yep, for sure.
So tip number 5 is actually kind of knowing your plan or your strategy when it comes to buying property. So in this sense, there's lots of different ways we could look at this, but the way that we've done this one is just to compare whether you want to buy a home for your first property or whether you want to do something like rent vesting, for example, where you buy an investment property in an area that might be a little bit cheaper to buy and then rent in an area you want to live. It's quite common, especially among people living in quite expensive cities, where they'll buy an investment property in a cheaper area first. So just to know the difference there, the difference in expenses, in costs, and to know the difference in things like eligibility for schemes as well, because if you're buying an investment, you actually won't get the eligibility for first home buyer schemes. So there's positives and negatives to doing both.
And you've got to look at the whole picture, both financially and also in your lifestyle. I mean, not everything's financial. There's so many considerations that come into play.
Yeah, and knowing what your future plans are too. So you might, buy a home, but then you want to travel in a while, or, just looking at those kind of future plans. Do you want to have kids soon? Knowing what the next kind of 5 years might look like is a good way to just understand the types of properties you might want to look at too.
If you're currently renting at the moment, you might have experienced the pain that is moving properties on a regular basis. So another thing I would say is we're kind of thinking about not just the immediate need for let's say 6 to 12 months, but even a bit broader than that. Couple of years, are you really going to want to go through the effort of moving again and again and again? And how does that play into your decision about exactly what you are looking to potentially buy?
Yeah, absolutely.
Can you grow in the property or can you not?
Yep, totally. And it will be different for each person. Sometimes people just want an investment property that will tick along and they don't have to worry about it. And they can just let that go. Or, some people are really, really important to them is having a property where they can actually live in and be there for the long term.
Definitely.
Tip 6 is getting pre-approved. Matt, take us through what pre-approval means.
It's a good one. I'm glad we're talking about this. So again, as brokers, a lot of our work is to get loans to the point of pre-approval. That is a term that basically is where, and look, it means a few things depending on which lender you go to, but in essence, it's conditional finance. So the bank typically will assess based on everything you provided to your broker, exactly how much they're willing to lend to you and on what conditions. So for example, if you are going to buy a property in a high density suburb, they might put a pre-approval condition that says, for this suburb, we'll lend to you a maximum of, let's say, 70% of the property value. So there are a range of different things, and you'll get a clear picture of, based on a lender and their credit policy, exactly how much they're willing to lend to you and on what conditions. it's a really important part of the process before you go into auctions and starting to do that, because you don't want to go and bid on a property and then not have finance, at least pre-approved, so you have no idea exactly what your lending and borrowing power might be.
Yeah.
An example might be a lot of your income is bonus based, and which is really good for you. But banks, depending on which one you go with, may or may not allow you to count that as part of your assessable income for the purchase of the loan. So pre-approval gives you those answers to those questions pretty much.
And it essentially just allows you to go into that purchase decision with a bit of confidence around how much you're actually able to afford.
Definitely. I would say one more thing, not to try and get too technical, but not all pre-approvals are created equal. And it's important to speak to your broker, because they'll know which banks actually do what's called a fully assessed pre-approval versus a system-generated, very quick, robotic pre-approval, inverted commas, which you might find if you went to a bank website. So going onto a bank website, for example, and typing in your income details and then your expenses, and then it spits out a number that might say you could borrow, say, $2 million.
Yeah.
You might find that there's just so many more details,
Factors.
really. Factors,
Yeah.
credit scores come into it, exactly where you're looking to borrow, the structure of your income, the structure of your household. So pre-approval is going to give you those answers.
Yeah.
And you want to make sure you go to a broker and get fully assessed pre-approval.
Yep, absolutely. Especially when you're doing it for the first time.
Yeah.
You want to have that confidence and not be in a position where you're putting yourself in a dangerous financial situation.
So, in terms of a property, do you think worst case, which I sometimes do think, I like an accountant by background, so
So
tend to have that a bit,
negative.
I know, I don't mean to be, it's called professional skepticism. Do you think worst case? So if you went and bid on a property successfully, you usually have to pay on the day of an auction, say, a deposit for the property.
Mm-hmm.
So if you subsequently can't make the finance, and hopefully this wouldn't happen to you, but if it did, then you're basically up for losing a percentage price of the property, and you're not up for the whole thing. So it depends on
You
the
lose
contract.
some of your deposit.
Lose some of your deposit, potentially. You obviously want to avoid that. So coming back to the tip, really great idea to get pre-approval, fully assessed from a broker or whoever you trust, and make sure that it is a fully assessed approval.
Yep, absolutely. On to the point of, I guess, pre-approval is all about getting yourself ready. The other one is to do your research, tip number 7.
Yep.
So, again, like you said, not all pre-approvals are equal. Not all properties are equal. So, do your research.
Yeah.
What suburb are you looking to buy in? What are the trends in that suburb? Again, a broker can give you some reports on different suburbs you might be looking at or different properties you might be looking at. Research, so it starts from, let's say, the area you're looking in. So are there schools around? What's the long-term property price, movements that have happened in the area? Is there any new developments that are going in as well that could help to lift the area and the local economy? What's the vacancy rate like? Even if you're buying a home for you, you want to think about, if I did turn this into an investment property one day, what are the vacancy rates like on rentals as well? So just understanding what it is you're actually buying. Compare it to if you're investing in the stock market, right?
Yeah.
You want to do the research on that company. What does that company actually do? How are they performing? What's their revenue?
Yep.
A property is an investment, and it's a pretty big investment at that.
Yeah.
So you're spending a lot of money on it. You want to do your research and not just think, oh, this property is pretty and it's got 2 bedrooms. There's so much more to it than that.
Kind of sounds like you're saying, use your head, not your heart. Or
Yeah.
a bit of both, but
Yeah.
definitely your head in
Definitely.
a larger proportion.
Totally.
Yeah.
Well, hopefully it matches both.
Yeah.
But don't just go on a heart emotional decision,
Yeah.
because you want to put yourself in the best position long term as well.
Definitely.
Yeah, and set yourself up for success. So do your research, and I guess on the point of research, when you're getting more to the actual purchase decision, things like getting a building and pest inspection, looking at the strata report too, all of those things are really important to actually understand the history of the property you're buying into.
So it kind of sounds like, actually, one of the tips is to think about the steps in the process of buying a property and then work out whether you have competency in doing and executing on those steps, or whether you need to have a team. I mean, in essence, really, if you've never bought property before, you may want a broker, you may not, it's up to you in terms of finance. You're definitely going to need finance, and you're going to need a lawyer to execute the sale of the property.
Yeah.
So to read the contracts, to give you advice on whether the strata report is adequate or not, whether there's more details you need, building inspect. So I actually would recommend assembling a team so that you have the people in place. And if you don't, then you can speak to a broker and they'll be able to refer you most likely to a team that can help you to make sure you've got those steps in place. You don't miss anything along the way.
Yeah. So I guess when you're buying property, there's 2 to 3 main people you'll engage with. The first is a broker, the second is a solicitor or a lawyer to help you with contracts, and then other people might include a building and pest inspector. It could include a buyer's agent if you're wanting someone to actually go and look for properties for you. We'll do some more on buyer's agents in a future episode, but and if you normally go to one of those, so if you came to us, for example, we've got a team of people that we quite often will refer people to that we've worked with and we trust as well.
Definitely.
So getting the right people around you that have done this before too.
Absolutely.
Tip number 8 is don't rush. This is one we see with first home buyers all the time, and it's something I did, and I'm sure you did, Matt, where the first property you fall in love with, you are absolutely determined you must get this property, and there's never going to be one again.
As well.
Oh yeah, and there's never going to be a property as good as this. But there's a lot of properties out there, and so it's just important to not rush any steps in the process. Make sure you've got that finance ready before you go into that decision, because you'll save yourself a lot of stress and there will always be another property. I remember I missed out on 3 before I got the one that I have now, and it was really stressful at the time, but now I've got the one I liked the best. So
you won. That's good.
Won.
Well done.
Yeah.
Don't rush is so true, and you got to think think about what's happening. Real estate agents are trying to quickly move the deal along, convince you into probably paying more than the property's worth. I guess the property's worth what the market pays in the end, but they're incentivized to get the highest possible sale price for the seller. Then they are not acting in your best interest as a buyer, and remember that. And don't be peer pressured by them or anyone else into doing something that you're not really comfortable with. So definitely don't rush is a great tip.
Really important. Alrighty, tip number 9, understanding how mortgage repayments work. Yay! God, something about the term mortgage just makes me cringe.
Yeah, I know.
It always has.
So it sounds like maybe it should be called prison or something. I don't know.
Well, that's what I mean. No, it sounds like that, but it shouldn't, because it doesn't feel like that really.
No, from a day-to-day perspective, it doesn't. But it sounds a lot scarier than it actually is.
Yeah, like I was like, oh, I've got a mortgage. Like it feels like a burden.
Yeah.
Like I'm like a parent. Like it's not a way you want to feel in your 20s.
Yeah.
And I think that's what some people, it stops them, because they're like, it gives you the idea that you're not free.
Yeah.
When in reality, there's lots of options.
Yeah.
And I guess paying off a mortgage is quite similar to just paying rent, except you pay it to the bank instead of to your landlord.
Yeah.
And you're actually paying some of it to yourself, back to yourself, kind of.
So,
anyway.
On that, I mean, we should probably distinguish between what a mortgage and a home loan is, because they're related but different. So a mortgage is actually a legal title that gets placed in a register against a property. It can be, or, an asset. It can be property, it could be cars, it could be a range of things. So there's a mortgage register that exists, and there's a state register of that. And then there's home loans. And often the terms are used together, but a home loan is actually the loan that you pay back to the bank. So just to clarify the terms there, we're talking about really home loan repayments, which are also called mortgage repayments, but the mortgage itself is a legal title.
Not really something you have to worry about.
No, it's detail, but it is actually something to distinguish.
It is.
Rachel, I'm an accountant. Always want to make sure people are clear.
Boring. No, I'm kidding. Thank you, Matt. Very helpful.
Yeah.
Something we all should know more about.
Yeah.
And I guess how a home loan repayment, if we want to distinguish, works is you've got a principal portion and an interest portion.
If you choose that product, you could choose interest only.
You could, but that's less common.
Less common. Yeah, less preferred, and usually high interest rates.
And normally people will do that on an investment property for a short period of time. For the purposes of today, let's stick to kind of the most common, which should be a principal and interest home loan.
Yep.
And that means that each repayment that you make, a portion of that is going towards the principal, so actually paying down the loan amount, and then a portion of that is going to interest.
Yep.
And interest is calculated on the total amount of the loan left. So when you're first paying off your home loan, a higher portion of that payment each month will actually be going to interest. And then as you pay off the loan, a higher percentage each month, depending on interest rate fluctuations, but over time, you'll be paying down more of the principal each month than you will in interest.
Now, sidebar on that is that this was taught, at least in New South Wales, I think in year 8 maths. But along the way...
I do not remember that.
Yeah, that's the whole point. Like, it was taught, but it's not really... Financial maths is a topic at school, but then it gets lost in translation somewhere along the way, or it's not relatable enough to your life at the time when you're maybe a 14-year-old.
Yeah.
So it's good to revise the concepts and
of
basic
interest.
Principles that exist and how it works. So
totally.
Thank you for that good explanation.
No problem.
Yeah.
Maths, here anytime you need, guys. I used to hate maths.
Really?
Hated
but
it.
You're so good at it.
Oh, well, do you know what I did? In year 11, I was like, that's it, I'm going to be good at maths.
Yeah.
And then I would do the maths class before class.
Yeah.
So that then I'd use the time in class to ask any questions.
That's
and
really
how I got
clever.
good at maths.
That's good.
But I didn't do my homework up until year 11, ever.
And
I used to
it's
sit...
all practice, isn't it?
Oh, yeah. Because I used to sit in class and me and my friend would, like, plan our children's names instead. Shout out to Ellie. Haven't seen her in a while, but...
Wow,
we,
okay.
She wanted to call her child, like, Simba or something.
Yeah.
And I was like... Okay. She was like, Simba and Griffin. I was like, yeah, totally. Love those names.
Lovely.
All right, I digress. Tip number 10, we're nearly there, guys. Thanks for hanging on. Have an exit plan. Now, we don't like to think about exits. We hope that everything always goes well. But it's important just to consider if you did want to or need to sell out of the property, what you would do in that case before you buy. Just makes you feel a little bit more comfortable. Definitely.
So you can discuss that with your lawyer, you can discuss it with your broker, or just between whoever you're... Maybe if you're just buying the property by yourself, have an idea, or if it's with a partner, then definitely have that discussion.
The partner one's a really good one, Matt. We didn't speak about it when we were talking earlier about plans, but you'll find often, not often, but it can be the case where you'll have a couple that are buying a property and they haven't really discussed a lot of the things they probably should. And I guess that just goes to the point of maybe it's good that we do an episode on relationships and money.
Yeah.
Something that we've both been through in the past, but it's really important that you have an honest conversation about your own individual feelings around property and finance and loans. And actually have a conversation together to make sure that you're on the same page, or if you're not on the same page, how you can get to a mutual understanding. Because if you're going into a loan with someone else, it's a really big commitment.
Yeah.
And you want to avoid getting down the track and all of a sudden realising you're on a completely different page to your partner.
100%.
Yeah.
That's a tough one to address, I suppose, but it's definitely a worthwhile thing, important to consider before you go and make that offer on the first property that you're going to buy.
Absolutely.
Cool. Well, there's 10 tips. In summary, should we maybe just go back through for the 30-second recap?
Yeah, let's do it. So, take it back to the top.
So, tip number 1 was create a budget.
Yep. Tip number 2 was to speak to a mortgage broker to compare different lenders and loan options.
And if you're not going to do that, someone you trust who also is knowledgeable, who can actually give you some guidance. You go. We didn't coordinate this. You go, Rachel.
Tip number 3 is to know your limits.
Definitely.
So know your limits in terms of borrowing capacity and what you're comfortable with.
Yep. Number 4 is be aware of available schemes that exist for first home buyers.
Yep. Tip number 5 was have a plan and a strategy of what type of purchase you're going to make, whether that be owner-occupier or investment.
Number 6 is get pre-approved. Conditional finance.
Yep, before you go into making an offer. Tip number 7 was do your research. Make sure that you've spoken to solicitors and building and pest inspections and everything else you need before you buy.
Definitely. Number 8.
Number 8.
I was like, is it 7 or 8? Damn it, I didn't listen. Number 8 is don't rush. So take your time.
There'll be another property out there if you don't get the first one.
That's exactly it.
And tip number 9, understand how mortgage repayments work. So understand what you're actually paying off and go back to basics on what interest actually means.
Definitely. And then finally, have an exit plan and consider that plan up front rather than waiting until, some exit event takes place in the future and then you have to stress about it.
We don't love that.
We don't.
Alrighty.
Well, that's episode 5 done, Rachel.
Episode 5 done. We're killing this. joking.
I might go have some strawberries now. What do you think?
We do love,
Yeah.
we like our cut up strawberries.
And I do
don't we?
actually have some green apples. Would you like to try some or
No,
not? Still no.
Still no. Way too
I do not
acidic.
stock pink ladies in this house.
They're also really expensive, pink ladies.
Oh, are they? I wouldn't even look.
Not
Don't
a great
know.
Unbroke decision
Yeah.
to buy pink lady apples, but they're so good. Alrighty, team. Alrighty,
See you
team.
next
See you
time.
next time. Woohoo.
All right, done.